Is your money just sitting in a regular savings account, barely earning anything? In the next few minutes, you'll see how a high-yield savings account can make your cash work way harder for you without taking on a lot of risk. Today, we're talking about what high-yield savings accounts are, what typical bank offers look like, and how you can choose the right one for your goals. Welcome to this video on high-yield savings. By the end of this video, you'll understand how high-yield savings accounts work, what to watch out for in bank offers, and simple steps you can take today to start earning more interest on your money. So, what exactly is a high-yield savings account? At its core, it's just a savings account that pays a much higher interest rate than a traditional savings account at most big banks. Many of these are offered by online banks and credit unions, and they are typically insured up to standard limits by government-backed insurance, just like regular banks. The key difference is that high-yield accounts focus on giving you a better return on your idle cash, often in exchange for operating mostly online instead of having a big network of physical branches. Think of it this way. A regular savings account is like planting a tree that grows very slowly. You'll see a little growth over time, but it doesn't feel very exciting. A high-yield savings account is like planting a healthier tree in better soil. It's still safe, it's still your tree, but it produces more fruit each year without you doing extra work. Now, let's talk about the kinds of offers you might see in the market. These are examples only, so you should always check real, current numbers when you create your own content or make a decision for your money. Imagine a traditional bank account called Everyday Saver at a big brick-and-mortar bank. The APY might be something like 0.01%. There's usually no minimum balance, but there might be a monthly fee unless you meet certain conditions, like keeping a specific balance or having direct deposit. Then imagine an online bank offering a high-yield saver account with an APY of something like 4% or more. It might have no monthly maintenance fee and no or low minimum balance, but it's managed entirely through a website and mobile app, not a local branch. You might also see a credit union offering a high-yield share savings account with a competitive rate, often slightly lower than the very top online offers, but still far better than traditional big bank rates, with low fees and a community-based membership model. When you make your own comparisons, always replace these example numbers with real data from official bank websites or trusted comparison sites, and note the date you looked them up. Interest rates change over time, so what's high today might not be high a year from now. To compare different high-yield savings offers, there are a few key terms you need to understand. First is APY, or annual percentage yield. APY tells you how much interest you'll earn over a year, including the effect of compounding. A higher APY generally means your money will grow faster. Second is compounding. This is how often interest is added to your balance. Some accounts compound daily, some monthly, some quarterly. The more frequently it compounds, the more you can earn over time, even with the same APY. Third are fees and minimum balances. A high interest rate doesn't help if monthly fees or strict minimums eat into your earnings. Always check for monthly maintenance fees, excess withdrawal fees, and the minimum balance required to earn the advertised rate. Finally, pay attention to promotional versus ongoing rates. Some banks advertise a very high introductory rate that only lasts a few months, then drops to a much lower rate. Always find out how long the promo lasts and what the rate will be afterwards. Let's make this more concrete with a few everyday scenarios. Scenario 1. You're building an emergency fund. You want 3 to 6 months of expenses set aside for unexpected events. A high-yield savings account can help that emergency fund grow faster while still keeping the money accessible when you truly need it. Scenario 2. You're saving for a short-term goal, maybe a vacation, a wedding, or a home down payment in the next 6 to 24 months. You don't want to gamble with that money, but you also don't want it sitting in an ultra-low-rate account. A high-yield savings account can offer a balance of safety, liquidity, and better returns. Scenario 3. You use multiple accounts. You keep a small buffer in your main checking or savings account for day-to-day needs, and you move extra cash into a separate high-yield account. This not only earns you more interest, but also creates a mental barrier, so you're less tempted to dip into that money for impulse spending. Now, how do you actually choose a bank and an account? Here's a simple checklist you can follow. Step 1. Look at the APY and how competitive it is right now. Don't just chase the very highest number for a single day. Look for banks that have a track record of offering consistently strong rates. Step 2. Confirm that the account is properly insured, usually through a government-backed program for banks or credit unions, up to the standard limits per depositor, per institution. This protection is one of the reasons high-yield savings is considered a low-risk place to park cash. Step 3. Scan for fees and fine print. Check for monthly maintenance fees, minimum balance requirements, and any conditions tied to the advertised rate, such as direct deposit or a certain number of transactions. Step 4. Evaluate how easy the account is to use. Is the website or app intuitive? Can you transfer money in and out smoothly? Is customer support available when you need it? Once you've compared a few options, your action plan is straightforward. First, pick 3 high-yield savings accounts you're interested in. Second, write down their APYs, fees, insurance details, and any conditions. Third, decide where you want to move a portion of your savings so that it starts earning more for you. You don't have to move everything at once. Start with an amount you're comfortable with. High-yield savings accounts won't make you rich overnight, but they can create a noticeable difference over time, especially for money that would otherwise sit in a low-interest account doing almost nothing. If you found this helpful, take a moment today to look up real, current high-yield savings offers in your country, compare a few, and consider opening one that fits your needs. Thanks for watching, and remember, your money shouldn't be lazy. Put it somewhere it can actually work for you.